There's not much alarm from companies so far. I want to go to Oxbow Advisors managing partner Ted Oakley on if the tariff fears have been overblown. Ted.
Well, I think the thing about it's too early, Charles, to find out, because if you look at it, the place that we think it will actually impact is in manufacturing and the margins in particular. Just a stat for you. If you look at GDP as a percentage of manufacturing, that percentage, it's about 12. But if you look at the profits in the S&P 500, it's about 40. So if you squeeze those margins, it has more of a stock market effect than it does a GDP effect. But I think we're too early to tell because we've been off and on all the way here.
You know, over the weekend, with over half of the S&P 500 companies out, the FactSet put out a report saying out of 159 conference calls they listened to, only 19 companies really said that tariffs had a major impact on the second quarter or the foreseeable quarters coming up. That's a relatively low number. I mean, you've got to specifically be a aluminum can maker, you know, like Coca-Cola, which, by the way, has other issues like a 30-year decline in drinks of carbonated soda, or Lennar, which buys Canadian lumber. What do you make of the idea? Are CEOs, you think, being too sanguine about this, or do you think that's a form of confidence that this will be resolved?
Well, that's what I was saying. I think it's too early yet because you've only had a short period of time for that to take place. And if you look at, well, just look last week at Owens Corning, Mohawk, GM. I mean, it's going to affect some companies. We just happen to think it will affect the companies in the margin area, profit margin area, more than any other place, and probably more manufacturing. I'm not certain that some industries, I'm sure, won't be affected from it. And it's hard to say at this point. I don't think they have enough information really at this stage to say it won't affect them at all.
Yeah, of the 159 companies, about 20 some odd said that. But it was interesting to me how many said it didn't have an impact, and they say visibility, they don't see it having an impact. So, beyond that, for me, when I look at these earnings reports, it feels like the dollar is the #1 issue, strong currency. We know President Trump doesn't like a strong dollar, and certainly doesn't want the Fed to make the dollar any stronger, as the rest of the world is sort of sitting on their hands and their currencies. What else then would be sort of impacting this market for you, Ted?
Well, the dollar is one thing. I mean, I look at, if you look at China, they're really pressing their yuan down on us, and you see why of everything going on the way it is right now. But I think the biggest thing for us right now is valuation in general. We don't see the valuation that we'd like to see. I mean, we carry a cash buffer right now in stock accounts, and not because we don't want to own things. It's just that so many things don't hit the value levels we want at this time, so we're carrying some cash at this point.
So you're looking for something of a pullback? I mean, there's a lot of value out there, Ted. You don't like some of these traditional value ideas?
Well, if you look at what we bought the last quarter, for example, we shifted somewhat, a little bit more to consumer staples. I mean, we looked at InBev, Nestle, Unilever, that type of thing. We do still like the oils, and we, to a degree, we haven't added any more than they already had. But we're not out of the market, Charles. I don't mean to imply that.
Sure.
I mean, but we're 23 or 24% liquid right now, only because if you look at the last 3 or 4 months, and most money managers would tell you this, you find something you want to own, you pick it up, and 2 weeks or 3 weeks later, it falls on you a little bit here, and that's typical of a late-stage market. Doesn't mean the market's over, but it's typical of late stage.
All right, Ted. Ted Oakley, always great talking to you. Thank you very much.
Thank you, Charles.